Word Snowden, an American author and former computer intelligence expert, stated on Twitter that Tesla stock is still excessively expensive. Elon Musk, the CEO of Tesla, questioned the public in a tweet whether he should sell any of his shares, to which he replied. And it appears that Snowden is not the only one who thinks this. Despite the fact that Tesla's market capitalization has recently surpassed $1 trillion, the independent investment research firm New Constructs maintains that the company is still overvalued by almost that amount. According to David Traynor, CEO of the company, Tesla shares might drop as much as 88% of that amount, or around $150 per share. Is the price of Tesla's stock genuinely too high? Might there be a fall on the horizon? Continue watching to learn more. In January 2020, Tesla Incorporated was valued at $117 billion by the stock market. By year's end, that amount had increased to $658.39 billion. On October 25, 2021, Tesla's shares achieved a milestone by crossing the $1 trillion market cap level in less than a year. Investors are confused by the rapid increase in value of Tesla's stock. It also begs the crucial question of whether Tesla will be able to sustain its pace in the wake of the epidemic for the same reasons that propelled the firm to $1 trillion valuation during that time. Tesla's meteoric climb has been facilitated by both individual investors and Elon Musk's tweets, but the company's financial complex is what drives the electric vehicle manufacturer's ascent. Among investment instruments included in this complex, according to the Financial Times, are options, stock-linked funds, and investment vehicles focusing on climate technology. These instruments have a major effect on the equity and derivatives markets. This complex has a symbiotic relationship with its stock. Funds and derivatives exposed to Tesla's shares generate large returns as the company's market cloud expands, drawing in additional investors and enhancing its influence. Here's an illustration. By July 2018, Tesla owned 106 exchange-traded funds, ETFs. By December 2021, that number had increased to 244 ETFs. Since Tesla was added to the S&P 500 index in December 2020, funds that track the index have had a greater exposure to the company's shares and have profited from the growth in the stock price. The firm was weighted at 2.5% of the index at the beginning of November 2021, having entered the S&P 500 with a 1.6% weighting. It has contributed around a quarter of the index's performance. As in the case of the S&P 500, Tesla accounted for 4 of the Russell 1000's total weighting in November. In excess, fundamentals tend to take a backseat, and Tesla is no exception. Even though the corporation only produced a small portion of vehicles manufactured by rivals like Ford Motor Corporation and General Motors Company, its market capitalization in December 2021 was around 5 times that of these rivals. The value of Tesla and associated financial products is largely based on the prospect of an electric car-dominated future. Since that scenario does not now exist, Tesla's present price seems ludicrous. Tesla's valuation has been artificially inflated, yet the financial monster driving the company's wild viral ride in the markets has also strengthened the company's fundamentals. The flood of capital pouring into Tesla's stock and related financial products help finance the company's expenditures in manufacturing facilities. Bonds, which require ongoing payments, are no longer as significant to the company. Tesla issued $10 billion in fresh equity last year at prices about 9 times higher than those of 2019 in order to take advantage of the demand for its shares. The company has been able to open other plants in Berlin and Austin thanks to this funding infusion. Together with the production facilities in Shanghai and Fremont, once operational, the business should be able to increase the number of vehicles it delivers. With adjusted earnings of $2.54 per share, which is up 218% from the previous quarter, and is the company's 4th consecutive quarter of double-digit growth, Tesla has officially opened for business. Revenue surpassed experts' projections of $17.01 billion by 65% to reach $17.07 billion. Furthermore, the maker of electric vehicles expects a large increase in output in 2022 despite ongoing issues in the supply chain. But once the company announced that no new electric cars, including the eagerly awaited Cybertruck, would be produced this year, Tesla's stock dropped. Conversely, Tesla plans to focus on expanding the number of models that are produced at both current and future factories. The enviable problem of demand exceeding supply currently befalls Tesla. Analysts believe that the key to resolving these problems is the production launches in Berlin and Austin, Texas. The majority of Tesla's cars for European consumers will eventually be made at its German factory. Beginning with the Model I crossover, as if Tesla's production capacity has grown dramatically, Musk wants to create 20 million electrified cars in the next 10 years. This is more than twice as much as other massive automakers now produce. It is therefore attempting to greatly expand its production capability. Three well-known German companies will compete with Tesla when it starts manufacturing automobiles in Germany. Daimler Mercedes-Benz division Dave, BMW YUIE, and Volkswagen Group Wedgick. There's a difference between a company's stock price and its pricing. Then a company's stock may be pricey even in the face of poor performance. That combo isn't ideal. A company may perform exceptionally well as long as its stock is cheap. That mix works well. But what about a business that has a high stock price and is most likely excellent? The firm in question is Tesla. Lawyers or hate mongers, supporters and detractors alike are steadfast in their convictions. This lacks a great deal of subtlety. It is commonly known that Elon Musk thinks the stock price of the company is too expensive. The price of Tesla stock is rising in spite of his cautions. But Musk seems to be raising the alarm these days, saying that the peak of the Tesla stock price in the stock market as a whole has been achieved. Tesla stock price has increased from about $60 per share to over $1,000 since January 2019. This indicates that at $1,000, investment in Tesla shares has grown 16 times to $16,000 for the investor. The 500 and index, including 500 of the largest publicly traded S firms, has returned 90 over the same 3 years, despite the stock appearing to be declining currently. This suggests that during the past 3 years, Tesla has outperformed the market by a factor of more than 17. Tens of billions of dollars have been lost by investors who shorted Tesla's shares, betting that the EV maker stock would drop in value due to the company's explosive rise. Many people think Tesla, an electric vehicle manufacturer based in Austin, Texas, is only getting started, despite the company's stock price experiencing a spectacular jump. Among these Tesla bulls, the most well-known is Cathie Wood, CEO of ARK Invest. ARK Invest states that Tesla's price target for 2025 is $3,000 per share. In the next 3 years, Tesla's stock price will rise 3 times if ARK's prediction comes to pass. In 2019, the $1,000 you invested in Tesla stock will be worth $50 by 2025. Tesla is expected to be valued $3 trillion, up from an already amazing $1 trillion. By contrast, the second most valuable car maker in the world, Toyota, is currently valued at $300 billion, but indications are starting to surface that Elon Musk, the CEO, is not one of them, at least not for a foreseeable future. Tesla's shares have increased in spite of Musk's continuous complaints that the EV manufacturer's stock price is too high, and Musk seems to have come to terms with this fact. Musk's discontent with Tesla's stock price at the moment is more related to the state of the broader stock market and economy than it is to the success of the electric car company he founded. Investors are hopeful that Tesla will lead the way in producing electric cars in our sustainable future and think other automakers may eventually adopt Tesla's software architecture as a standard. Furthermore, nothing about this tale has gotten worse. The bulls still think this way. Put another way, since late 2019, Tesla's optimistic 2035 prognosis hasn't actually changed all that much. However, Tesla stock has surged by more than 1,500% in the last 3 years. It is grown into a 16-bagger in just 3 years. They have multiplied 3 times, twice, and 3 times more.
Oh.
And just for kicks, they've doubled once more. It is hard to imagine the stock's future resembling anything like its recent history, not even the best of scenarios. Many things need to go exactly as planned for this not to go horribly wrong, many of which are, in my opinion, beyond Tesla's control. How do you feel about Tesla's stock price? Please leave a comment below.